All right, let's get right into it. The market really hit the brakes today. After getting so close to that all-time high, geopolitical reality, well, it finally bit back. Wiped out a lot of the optimism we saw last week. So let's break down where we landed before we head into what's shaping up to be a very, very critical overnight session.
So here's the scorecard. The S&P 500 closed at 7108. Now that's only down a tiny bit, but trust me, the weakness under the surface was there all day. But the real story, the absolute monster in the room, is Brent crude. It just ripped higher, surging over 5%. Meanwhile, gold got knocked around by a strong dollar. And Bitcoin, it's just kind of hanging out, consolidating. Really just acting as a weather vane for market jitters.
And this slide right here, this tells the whole story, doesn't it? On one side, you've got the S&P 500 just hitting a brick wall right at its peak. And on the other, you have that explosive, almost vertical move in crude. This split, this divergence, that's everything. One side of the market is flashing caution, while the other is screaming crisis.
Okay, let's zoom in on the S&P. For now, it's holding its ground above a really key technical level, the 50-day exponential moving average, sitting there at 7,057. Just think of it as the floor for the current trend, a line in the sand traders are watching. But here's the problem. The market's breadth was paper thin today. That means just a few big-name stocks were doing all the work to keep the index afloat. When you see that, it's usually a bad sign, a real sign of weakness underneath.
Now, back to that monster in the room, oil. That 5.4% jump wasn't just some random flicker on the screen. No, this was a violent reclaim of the crucial $95 level. A move this big, this fast, slams the fear of inflation right back onto the table. And believe me, the Federal Reserve is watching this, and so is every consumer. And it's all being driven by one single thing.
And here it is. This is the why. All this volatility, it's not random. It's a direct result of diplomatic talks in Islamabad completely falling apart and the immediate, and I mean immediate, closure of the Strait of Hormuz. And when I say broken down, I mean a complete and total collapse of expectations. Any hope of a peace dividend getting priced into this market got erased today. Tehran announced they're not even sending their negotiators back to the table. For now, it's over.
And look, Tehran isn't being coy about why they're walking. They are pointing the finger squarely at a U.S. naval blockade and the seizure of one of their ships. They're calling it a direct violation of the truce. This isn't just diplomatic noise. This is a serious, direct accusation that just throws fuel on the fire.
So what's the immediate consequence? Boom. The Strait of Hormuz is officially closed to all commercial ships. This is the jugular vein for a massive amount of the world's oil supply. Shutting it down isn't a negotiating tactic. It's a direct economic attack. And this is the timeline we're up against. The original ceasefire deadline is less than 48 hours from now. The ultimatum from the other side is crystal clear. Either that waterway reopens with no conditions, or this conflict goes to the next level. The clock is ticking, and it is ticking loud.
So, here's the big takeaway for you tonight. All of this creates what we traders call a binary market. It means there are really only two ways this can go, with pretty much no middle ground. Outcome number one, some kind of diplomatic miracle gets pulled out of a hat in the next 36 hours. Outcome number two, Brent crude oil gaps up and opens north of $100 a barrel.
Okay, let's dig into that binary setup. How exactly is the market trying to figure this out? Well, it all comes down to a very clear bull case versus a very clear bear case. Two totally different futures.
All right, on one hand, you have the bears, the pessimists. They're saying last week's record high was just a classic bull trap, a fake-out designed to lure in buyers right before the floor drops out. They see this energy shock sticking around, becoming a real problem, and potentially pushing the S&P all the way back down to its long-term floor at 6,663. But on the other side, you've got the bulls, the optimists. They're betting U.S. pressure is going to force a last-minute deal. If they're right, we could see a massive relief rally, with trading algorithms firing off a huge short squeeze that rockets the market up towards 7,200.
So, with warships on the move and diplomats packing their bags, what's our game plan? It's simple. Capital preservation. That is the only trade that matters right now. Forget being a hero. So here are the key levels you absolutely need on your charts tonight.
First up, 7,100 on the S&P. This is the pivot. Think of it as the front line in this battle. Last week, it was support. Buyers held that line. Today, it was a ceiling. Sellers defended it. If we open below this level tomorrow morning, that whole record recovery story is in serious trouble.
And below that, your structural floor is 70.57. That's that 50-day EMA we talked about.
If we lose that level, especially on a bad headline that the talks are officially dead, you just get out of the way. Period. Don't think twice.
And finally, keep your eyes glued to $95 on Brent crude. If oil stays above this level overnight and into the U.S. Open, that's your signal. It means the inflation trade is back in the driver's seat, and that will put a hard ceiling on any hope for a stock market rally.
So the play here is to be cautious. Don't get over your skis. Don't believe any headline until you see proof that ships are actually moving through that strait again. This market is moving fast, and like we always say, the ledger doesn't wait for latecomers. Stay disciplined, watch your levels, and I'll see you for the morning update. This is Steve. The ledger is closed.